Yesterday's VIX Divergence called the next 4-year bull market. This has only happened once, happened at the beginning of 2003. You see right here, there was a VIX Divergence where there was a lower low in the S&P 4 days, or actually 3 days in a row, and a lower low in the VIX 3 days in a row. Those markets typically, the VIX usually moves in the opposite direction as the market. They moved in the same direction, so they diverged, and it ended up being a bullish signal in 2003, January, very end of January 2003. Has a profit target right here. I'm going to show you the open code easy language. Very simple setup. It hit a profit target there. The divergence happened again here. So two times in 2003 this happened, and it hasn't happened since. And so we're about to enter 2023, so almost 20 years ago. It called this signal was good based on the parameters for about a year, but it did call the next 4-year bull market before the global financial crisis in 2008. And so I'm going to show you the code for this, show you the performance report. So only 2 trades going back to, I went back I guess to the beginning of 2000 or end of 2000. And so this millennium so far, 22 years old, this has only happened twice. It happened both in 2003. Here is the equity curve. Only 2 trades. It's very low frequency. I don't actively turn on trading systems that haven't traded, they don't trade very frequently. And so this is something to consider for a longer term trade, potentially, if it does call a turning point. Big divergences can call turning points, and we constantly talk about the concept of what the market should do versus what it ought to do, and the fundamentals seem bearish. These technicals would appear bullish, but a sample size of 2 is not statistically valid. You see here that it took about 2 months for this to turn around. And so I'm going to show you the code now, and we'll talk about it a little bit more. So here is the code. It just simply looks at the lows. If the lows decrease on data 1, VIX is hidden, it's data 2. I hid it in the chart setup, but it's just low is less than the low of 1, and low of 1 is less than the low of 2, and low of 2 is less than the low of 3. And I'm going to show you that on the daily charts. So here is a daily chart of the ES.D, which is a day session only chart. You can see this low of today is less than the low of here. This low is less than that low, and this low is less than that low. And these markets typically move in opposite directions. Here is the VIX. This is today's data. The VIX has already started, so we'll go back to here for yesterday. And you see this low is less than this low, and this low is less than that low. This low is less than that low. So lower lows about 3 days in a row. Here's Monday's trade, Tuesday, Wednesday, Thursday's trade. And this is the same thing. Monday's trade, Tuesday's trade, Wednesday's trade, Thursday's trade, and the VIX has already started plotting data. It's 30 minutes until the day session opens for the stock market, but the VIX starts trading. This chart starts before the stock market, and so we're just looking at the day session on the stock market for the futures, S&P futures, and let's go back to the chart. And here it is, 2 conditions. Then buy next bar at the market. Now, set stop loss of 4,000, set profit target of 8,000. Those numbers are at a much lower index level. And so visually on your chart, if you saw the S&P drop this much on your chart, you'd need a much bigger stop loss. And so this is not something that I'm going to trade. It should generate a signal today. It's not something I'm going to trade, but use maybe to determine a turning point. Fundamentally, based on this VIX divergence, and look for more information on a fundamental trend. We like to look at fundamental trends in our automated trading systems, and this is one way to do it. I like to study divergences. Again, this is a low frequency divergence, so it's from a short-term trading perspective. It can be used more for a long-term trend, and this one lasted 4 years with the strength of this. The strongest part of it within the first year. 2 trades in the first year, so something to look for, VIX divergences.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.